At CLA, we're not just in your corner, we're on it. We're advisors and advocates, planners and patients, consultants and cart returners. We coach third on Saturdays and businesses during the week. We're your neighbors, which means wherever you're coming from, we're right there with you. Wherever you're going, we'll get you there. CLA, CPAs, consultants, and wealth advisors.
Welcome to the Iowa Economy Podcast. I'm your host, Chris Conetzkey, president of BPC and publisher of the Business Record. The Iowa Economy Podcast is supported by our sponsors, CLA and the Iowa Lottery, and is your place to get the economic insights you need to help you and your business stay ahead of Iowa's economic curve. We've got a delicious episode for you today, and I mean that, which will stray a little bit away from Wall Street, Fed rates, and the markets, and instead we're going to take a look at an aspect of the economy that is a highly visible part of our economy and an intimate part of our daily lives and community: restaurants. Restaurants are under all sorts of pressure: inflation, labor, rising rents, changing dining trends, demographic shifts, not to mention a hangover perhaps from changes in habits after the pandemic. Frankly, it's just a tough business to turn a profit in, and yet countless folks are pouring themselves into their restaurant businesses, and that's what makes for a rich and vibrant community for us. And so we wanted to explore that a little bit today. There's no shortage of headlines of restaurants closing and opening. So today we're going to unpack the restaurant economy, learn a little bit about its health and where it is currently, some of the opportunities, and hopefully provide a little bit of a peek ahead at the curve of what could be coming next. And we've got a great group to help us do that today. First, we've got Chris Diebel. He's the founding partner of Bubba and a local public affairs consultant. Welcome, Chris.
Thank you very much.
And we've got Jessica Dunker. She's the president and CEO of the Iowa Restaurant Association. She's got a great pulse of everything happening in the restaurant industry across the state. Welcome, Jessica.
Thank you for having me.
Also with us today is Winnie Moranville. She's a longtime Des Moines food and restaurant writer and author of Dining Well in Des Moines, which is a newsletter on Substack. Welcome, Winnie.
Great to be here. Thanks for having me.
And I should say she also is a contributor to DSM Dish, so thank you for helping us out there as well. Sure. Next, we have Chad Moutre. He's the chief economist and senior vice president of industry, research, and knowledge for the National Restaurant Association. Welcome, Chad.
Yeah, nice to see you.
And lastly, we've got Bill Wright. He's the senior vice president of CBRE. Welcome, Bill.
Great to be here. Thanks, Chris.
Bill was on our most recent commercial real estate panel back in April and had some comments about the restaurant industry. Him and his firm work often from a leasing perspective for restaurants. And so that's the angle he'll be bringing to the conversation today. So we're going to start things out by getting a little bit of sense of where we are as an industry in the restaurant industry and the restaurant economy. So I've asked each panelist to provide one insight about the current state of the restaurant economy. And because we want to have a little bit of fun talking about food, to share perhaps one maybe insider foodie tip that we can all take away from this, even if we're not going to go out and make some stock market bets on restaurants. So let's go ahead and start things off. Chris, I'll have you take the first shot at the question.
Sure. Well, I think that the biggest thing people need to remember is that the issue is not always sales. The issue is that every dollar of sales is worth less profit than it was 5 or 6 years ago. And the result is that many restaurants can appear busy while profitability continues to erode.
Great point there, Chris. Give us your insider foodie tip. I know you've got a few.
I do. I recently had out-of-town guests who were vegan, and I am definitely not a vegan. And so I found myself looking for the need to chase down 3 days worth of vegan places. And while I will say, shameless plug, Bubba does have some great vegan items. We can only eat there once. And we went to the Arts Center Cafe, the L'Ami Arts Center Cafe, and they have an entirely separate vegan and vegetarian menu that I thought was a great find. And then Flora at the Botanical Garden was also really great for vegans. So if you find yourself needing to find a home to feed some vegan friends, I would suggest both of those.
Great tips there. And it's okay to do a few shameless plugs here today. We're about helping support the restaurant industry. Everybody here is trying to do that in some fashion. So by all means, feel free to get those in there. So Jessica, why don't you share us a little bit about your perspective?
Yeah, so I'm not going to compete with Chad on statistics with the National Restaurant Association, but I agree with Chris on profitability. What we're really seeing is a splitting of three tiers into the market. And so the quick service, limited service, they continue to draw consumers that would have been in the traditional family or table service market, so that just to adjust for costs. And then folks that can afford the fine dining, the higher fine dining types of places, they seem to be doing well. So it's that middle that's getting squeezed, and it's where most of the independent operators are. The vast majority of our members, for example, are single location owners. And so that's where our worry is, and that's where you're seeing the closures, I think, in Des Moines, are those single location table service restaurants that aren't necessarily a fine dining establishment that maybe once drew families, and now they're losing those to limited service restaurants.
It's a great distinction. I probably fall a little bit into that category. I understand the quick service. I've got two young kids. The sitting down becomes more of a challenge at this stage of my life. So,
Yep.
All right.
But I will share a happy thing now. So there is a website, iowafarmtotable.org, that I encourage people to get out and take a look at, because it's offering people really unique Iowa dining experiences. There are seasonal gatherings, there's culinary journeys, and there's farm-driven restaurants up there. And one of the things that I think looks amazing is a bookable experience where you can walk the Des Moines Farmers Market with Anthony Nace from the downtown Des Moines Hilton and his restaurant, and then he will make a meal for you with what you all chose together at the farmers market. So that, among other experiences, are up there. So Farm to Table is alive and well.
I imagine that would be quite the attraction for an out, especially I'd be interested in that anyways, but for somebody that's from out of town, that would be a great opportunity. Yep. All right, let's bring Winnie into the equation. Winnie, why don't you share a little bit from your perspective?
Well, as I mentioned when we were talking earlier, I did a survey of my readers on my Substack column, and I was surprised. I knew that more, 6 in 10 diners weren't, are pulling back from dining. I kind of knew that would be a high number. But what I didn't know was that the reason isn't just price, it's value. When I asked why people were drawing back, it had to do with price, quality, or both. And more than half specifically included quality in their answer. A couple quotes: "The value equation isn't working. It's become too expensive to be disappointed." I've heard that again and again, that like, I want to go out to eat, but I can't afford to be disappointed. It used to be, hey, if it cost $50, it was still fun to go out. It was just nice to be out. But now that it's $100, it's not, it's hard to be disappointed. You don't want to walk away saying, I just spent $100 and I wish I hadn't. And that's what I think some of the people are feeling. So that surprised me. I really thought people would say it was just all cost. It's too expensive. But what they're saying is it's too expensive for what I'm, the way I feel when I walk out of a restaurant. Well, and that's sad.
I appreciated that post that you made and being able to see some of the nuanced responses. And what I came away from that going is there's just a lot of factors, and the collective amount of factors is what's really the challenge when you're thinking about the industry. So a good tip. Your Substack is a great resource for awesome tips. So give us a good one.
Well, and I'm not saying this just because Chris is on the podcast today, but I'm really enjoying the salads at Bubba. I mean, we think of Bubba Southern Comforts as like nice, big food, hearty food and all that, but it's really a good place for salads. They do a great job, especially anything with Gulf shrimp. I don't know where you get, really good Gulf shrimp on a salad is a rare thing, and they got it there. So I love that.
Well, great tip. And I'm sure Chris is happy about that one. So, yeah. All right, Bill, go ahead and from a real estate perspective, tell us a little bit about what you're seeing.
Yeah, I think from a real estate perspective, a lot of times, especially in central Iowa, you go to markets like Grimes or Ankeny or Waukee, and you see all these new restaurants, and you just say expansion, expansion, expansion. And that is happening in certain markets. But I think to stress what's already been said today, at that middle market of restaurants, those single entrepreneurs, there's a lot of headwinds in the restaurant industry right now. I think the labor, especially post-COVID, labor costs really escalated quickly. I think that's starting to kind of level off a little bit, is what I'm hearing from clients, which is great. But some of the commodity prices, there's been inflation, but there's also certain uncertainty in some of those commodity prices where they don't, it's up, it's down, it's up, it's down, and it's all around. And so I think that's been tough. And then my department, real estate, it's construction costs are up, land pricing is up. It is extremely expensive to build a restaurant. And because of that, what it means, it ends up being a top line sales number. You got to do more sales in order to justify turning a profit. So I think that's the headwinds that we're seeing in the restaurant industry. You're certainly still seeing expansion. You still see people want to get into the restaurant industry, but it's also a very tough industry to make money right now.
Let's hear one of your big foodie tips.
Let's see. I would say one of my I love Mediterranean food, and there is a restaurant in Des Moines called the Green Olive on Fleur Drive that serves some of the best chicken, beef, kebabs, and falafel that I've ever had. And I've gone all over the world looking for good Mediterranean food. And the Green Olive, I highly recommend. It is. You're not going to be blown away with the decor or anything there, but the food is just top notch.
I think they just opened a new location, if I remember right. Somebody will have to help me with that. But Cityville, you're right. Perfect. All right. So Chad, I purposely saved you for last from a national perspective and some of these trends. I'm curious if you give us kind of an update on how you're seeing the world and maybe connect the dots back here to Iowa a little bit.
Well, I like all of these comments, and it makes me want to go to Bubba's as well as a lot of these other places. So, number one, the math is difficult, right? We know that the typical profit margin for a full service restaurant is 2.8%. That's the median, right? But we also know 42% of restaurants said that they weren't profitable last year, right? Again, pretty challenging environment just because of those extra costs. We also are seeing, much like Winnie, people pulling back, right, in the last year or so because of just a really tough consumer situation, I think, especially for the lower and middle incomes, the lower part of the K. But I'm going to give a positive comment here, which is one of the things that continues to come up in our research is that even when people are pulling back in other areas, they're not taking that vacation, they're not making that big ticket purchase, right? You still want to go out to eat, right? You get tired of doing dishes, you get tired of, you want to try something new, right? Go out and celebrate those big occasions. And so we actually find that eating out is the top discretionary spend, right? You might not, even if you don't go out to do other types of entertainment, you're still going to go out to eat. And I think that has given us some resilience, right? And we can talk about some of those numbers in terms of sales or employment, but I think that's given us a little bit of a tailwind that I think other sectors really haven't seen in this economy.
We should ask you for your foodie tip too. It doesn't have to be to Iowa, so we'll take any good tip from you.
Well, I think if you look back, comfort food is big now, right? I think in really uncertain times, people kind of take comfort in those kind of meatloaf and things that they kind of grew up with, and so I think that's, to me, right? When I go out to eat, I tend to I get the same thing. And if I went to Bubba's, I'm sure I'd get the same thing every single time.
Probably the meatloaf, I would guess. Actually,
if they have meatloaf or French dip or whatever, chicken parmesan, I'm all in. I can shut the menu at that point.
We'll have more from our guests in a moment, but we are able to bring great conversations like this to you because of the support of our sponsors. This next segment right there with you is brought to you by CLA, a professional services firm with a rich wealth of knowledge and experience that we're tapping into in order to provide you with a hand on your shoulder and perhaps just a little bit of clarity in the midst of the economic haze. Right there with me today is Josh Hoffman, who's the investment banking director of CLA Meridian Capital. Josh, welcome.
Well, thanks for having me.
Well, why don't you just start off and give us a little bit of a snapshot of the M&A advisory and investment banking practice and perhaps maybe what differentiates your approach?
Yeah, sure. So CLA Meridian Capital has been advising business owners on M&A and capital raising transactions for close to 30 years. We focus exclusively on the middle market, so deal sizes ranging from 25 million up to about 750 million, with the vast bulk of those being in the 25 to $250 million range. About 85% of our work is for family founder-owned businesses. And that really differentiates us because we're focused on those family businesses and those founder-owned businesses. And a couple of things that really differentiate us are, first is deep industry specialization, right? Our bankers don't just do deals; they live in the industries that they specialize in, which means really specialized knowledge, both of the buyer universe and of the operations of the business, as well as the multiples in the space and the competitive set. Second is we're a part of CLA, which is a 9,000 person professional service firm. So that gives us global scale and global reach that you don't generally find in this size of the market. You don't typically get that type of reach and expertise within the boutique world, and so we think that differentiates us pretty well. And the proof's really in our outcomes. We've closed roughly 90 to 95% of our deals at or above our predetermined valuation range.
We've talked a lot about M&A on this program, and there's of course a lot of that happening in the banking industry here in Iowa. In particular, there's a lot of mergers and acquisitions happening as businesses transition and perhaps owners age. So give us just a little bit of a feel for what you're seeing perhaps in terms of M&A activity among buyers and sellers.
Yeah, I mean, look, I think the market has gotten busier over the last couple quarters. Activities definitely picked up materially, really to start of Q2 of 2026. M&A multiples ticked up to about 7.3 times as a general average in the lower middle market, from about 6.9 times at the end of 2025. And that was really the first quarter in a few years where you saw deal volume and deal pricing rise together. That's a real signal, right? And the sentiment among buyers is there's a lot of deals out there, but there's not a ton of quality deals. For about the last 24 months, sellers, especially A-quality sellers, have held back. They've been waiting on interest rates to come down. They've been waiting on the macro environment to stabilize, and that's starting to shift. And I think now is really an optimal window for those types of businesses to come to market. Private equity sitting on a record, over $3 trillion of capital that needs to be deployed, and a lot of that's coming up towards the end of its investment period. Meaning those funds need to put that capital to work. And you pair that with strategics who've reset their balance sheets at the end of last year, and you really have a competitive buyer dynamic that we haven't seen in a long time. My personal view is the competitive dynamics around an A or an A- quality asset right now will move valuation more than waiting for a 25 or 50 basis point rate drop over the next 6, 12, 18 months.
Are there some areas that are perhaps experiencing a lot of growth right now?
Yeah, I think right now, anything related to infrastructure build out and AI is having a huge moment in vogue, if you will. Anything that ties into the AI build out, right? There's, I believe it's about $2 trillion of expected AI build out over the next 5 to 10 years. So anything that provides services or products that will support that, that's really attracting a lot of buyer interest. But really beyond that, anything that's related to the infrastructure refresh that's going on in the U.S., products and services tied to infrastructure, the infrastructure refresh, are really seeing a ton of buyer interest. There's about $1 billion or trillion to 1.2 trillion of capital that needs to be spent on just the water infrastructure in this country over the next 20 years. Right? And that doesn't account for roads, the grid, airports, and all the other infrastructure. So, buyers are really looking for that infrastructure-related end market demand. And in addition, anything that's got kind of contracted revenue, recurring revenue models, anything that sort of supports the long-term durability of the business is really in demand.
Well, there's a lot of organizations, of course, that are going to be going through that process for the first time. And if you're a business owner and you're trying to go through this process, what are maybe some things that you should be thinking about as they're navigating that process that perhaps CLA could help you with?
Yeah, look, I think there's probably 4 things that lead to a successful transaction, right? Number 1 is knowing your numbers cold, right? Not just the P&L, but the data behind it, and the things like customer acquisition cost, margin by service line or product line, revenue and margin by customer retention rates. Buyers pay premiums for companies that can really elucidate their performance and why they're performing the way they are, not just showing a nice P&L, right? Number 2 is knowing your competitive position in the market, right? Being able to articulate why customers choose you, why you win in the marketplace. Also knowing what your competitors do well and what they don't do well. That conviction shows up in value. Third is to have a credible growth plan, not just to say we'll grow 15%, but say we'll grow 15% by adding these 2 service lines or these 3 products. We've already piloted them. Here's what it's cost. Here's what the timeline is going to be. Buyers are buying the future. They're not buying the past, right? And fourth, and I think this one's underrated, really having management depth, right? Buyers, especially private equity buyers, penalize key person risk. Right? If the business can't function without you for a week or two, the buyer's going to discount that, right? Succession and second line leadership are really important valuation drivers. And honestly, the best time to start working on all those is probably 2 to 3 years before you really want to sell, because then you're able to demonstrate results from them and it'll get included in the valuation.
Well, Josh, I appreciate you giving us a little bit of insight to what's going on in the MA market, some of the ways that perhaps CLA could be helping along the way. Anything else you want to leave us with today? Yeah,
look, I think the biggest thing is if you're thinking about exiting, if you're thinking about selling your business, hire an advisor, right? I've seen so many clients or potential clients, try to go on their own, and it just leads to a power dynamic in the negotiation with the buyer that puts you at a real disadvantage, right? I think sellers underestimate the amount of preparation and the various skill sets that go into running an M&A process, right? They're experts at running their business. We're experts at selling companies, right? Most folks don't do that every day, and it's a really specialized skill. So if you're looking at selling your business, that'd be the one recommendation I have is hire an advisor. We'd love it to be us, but even if it's not us, the best way to protect your value that you've built is to have an advisor.
Well, thanks again, Josh, for being with us today. And thank you for joining us for Right There With You. I'm glad CLA will be right there with us all year long. If you want to learn more about M&A advisory and investment banking services, you can contact Josh at his email and find additional CLA resources at claconnect.com/resources. Jessica, I wonder if you could help me understand a little bit about Iowa, the impact of the restaurant industry on Iowa's economy, and maybe some of the ways that that's interacting with other businesses in the community, just to help level set a little bit about how that affects the community at large.
Yeah, so just Iowa is not unique in that Des Moines, being the largest metropolitan area, we have been overbuilt on restaurant seats for some time in Des Moines. And my job is a statewide job. And I will tell you that the closures and some of the struggles that we see in Des Moines, we see less of in other parts of the state. So I hear far more urgency about profitability, about customer traffic when I'm outside of the Des Moines area. That being said, there are more than 6,000 restaurants in the state of Iowa. We are in the top 5 employers in the state. We just on eating and drinking establishments alone, we have more than 100,000 employees. We contribute $7 billion to the economy. So, we are an important and substantial part of Iowa's economics. I will say one of the things about developers, not to start a little argument, but it is difficult in the restaurant industry because real estate developers are constantly calling us. And if you have something successful and they're building yet another building with a strip mall, they're looking for 2 ends. They're looking for a restaurant on one end and a restaurant on the other end, because we've lost so much other retail. And so when you're building a strip mall, you might get a phone store, maybe an accountant, right? Maybe a nail salon. But what's drawing traffic into those buildings are those 2 restaurants on either end. And that has made a lot of people dream big and maybe beyond realism, particularly in the Des Moines market, moving multiple directions, because we just can't sustain the restaurant seats that are built in Des Moines. That's not a popular opinion, but that is the math, and the math is difficult.
That's interesting. I'm curious. When I hadn't thought about from a restaurant seat perspective, is there a metric you look at from that standpoint, or is it
for us?
Yeah.
I think, normally I want to say, and Chad, you can correct me here, but it's normally based on per 100,000 people, how you would measure seats. And Des Moines has consistently ranked as high sometimes in when you look at the population and the number of restaurants in the same category as large cities like New York City and how many restaurant seats are available per person. So, but Chad, maybe you want to add to that.
I don't know the number, but I hear all the time from operators just how competitive it is, right? And I think that competition really just speaks to just how many restaurants there are, and there's, it's easy to get into this business, right? But the competition level is just pretty intense.
Yeah.
Chris, from your perspective as a restaurant operator, how do you think about that discussion?
I think it's spot on. Quite frankly, I mean, as someone who operates a business in downtown Des Moines, which that zip code has seen drastic change in its workforce in the past few years, and quite frankly, it's not coming back near fast enough for most people's life cycles in their business. The critical mass of people it takes to justify larger seat spaces in particular is just different now. I do think, as Jessica was pointing out, the folks who are trading down to the next level, I see a lot of strong growth with quick service, the counter service type places. And what I find ironic is how many people are willing to splurge on a delivery service that, quite frankly, is going to bring them cold food at the end of the day. They're willing to spend on that convenience, but they have not been as willing to spend more in the dining space. And I think Winnie's survey maybe gets to some of that, which is, the $12 cheeseburger from 7 years ago is 18 now. It just is. And so people's expectations haven't caught up with the realities of the expense side of this equation. And so, yeah, I think we're seeing that really heavily in downtown right now. But I also think the scatter to the suburbs is going to create some saturation points that in the next 5 years, we're going to see some issues out there as well. These $35 to $45 square foot rents are really hard to sustain unless you are, a top 1%er restaurant. And most of us are not. And so that's something we're looking at as we're looking at potential new projects. We're constantly thinking in those terms. I mean, Bubba's around 7,000 square feet, all said and done. There is no way I would do a 7,000 square foot restaurant right now in Des Moines. I just wouldn't. I would look at fast casual. I might look at something more boutique that feels more neighborhood. And in fact, we're having those conversations, but I don't think anybody should be thinking in terms of large scale restaurants in downtown Des Moines right now.
Bill, from a real estate perspective, what have you been seeing? And maybe we have had a little bit of a conversation around that. Just curious what your thoughts are.
Yeah, I everything that's been said is spot on. I think what's interesting is, I've been fortunate to do this for 34 years. And it wasn't too long ago where I would sit down with a restaurant and we're looking at one of those strip centers that was being described there. And we're looking to lease a space. And, usually when I'm looking at a business pro forma, it wasn't too long ago, Chris, where we were trying to get total occupancy costs, base rent and CAMIT being common area maintenance, insurance, taxes, kind of 7-8% or less for a sit down restaurant. And now I run into folks that are looking to open a restaurant and I look at their pro forma and, and then I say, well, if you plug in the $34 rent that's being asked here, and by the way, the CAMIT's $15 a foot. So now you're close to $40 to $50 a foot, all of a sudden based on their pro forma, I'm looking at a business plan where, 15% of your sales are going to occupancy expense. I'm telling you, it's not going to work. I mean, it just doesn't work. I mean, we just heard that, the average restaurant has like 2.9% profit margin bottom line. And, if you're eating all that up and you're doubling your rent budget, it's just not going to work. And, unfortunately, you just can't go out and just elevate that sales number at the top. So what happens in the real estate world is, when I'm working for landlords, I give counsel. Sometimes not doing the deal is the best way to go because, if I look at a business plan and I see that example I just gave, that particular operator is going to have a tough time lasting much beyond a couple of years. I mean, obviously there's circumstances where maybe the operator's well capitalized and maybe they have a lower threshold, but for the vast majority of the restaurants that I work, restaurant owners I work for, they're doing this out of a passion, out of a love, and it's not endless resources.
Right.
So you really have to balance that out. And I try to take more than just understanding the lease. I try to take that extra step and say, okay, what do these occupancy costs look in terms of your entire business model?
Chris, you talked about that, it's not just the revenue side of the equation, it's your profit side, right? Can you talk just a little bit about some of the factors that you've experienced that are eating into that profit margin and just how you're trying to approach it at the moment?
Right. So even if sales growth stays fairly steady, which for many it's stagnant or worse, what you're seeing is that labor's gone up, food costs have gone up, insurance, utilities, and then those occupancy costs remain elevated. And there's only so much that the consumer is willing to absorb in the form of a price increase. And so you're constantly trying to juggle that stuff. And there's ways that you can do some of that to, protect your margins with a little bit of cost increase. We try not to do that more than twice a year. And when we do it, we try to do this in the terms of quarters, not in the terms of dollars, because we don't want people to freak out. Also, there's portion size, that you can look at pulling back. Will the consumer notice an ounce or two less of protein? And if that means you can hold the line on the ticket price, is it worth it? We're constantly having those conversations when we're looking at optimizing menus. Is there some way to increase guest frequency? We've recently done a steak night on Monday nights, and then negotiating your occupancy costs. So rent. I'm aware of a number of operators right now who are actively renegotiating, not a temporary reprieve, but permanent rent reductions. And I think it's going to take it because I think most of these landlords do not want these spaces back.
Winnie,
Chris, if I could add something.
Yeah.
When I started working with the association, which was in the early 2000s, we used to look at 30, 30, 30, 10. So 30% food, 30% labor, 30% other, with the hope for a 10% profit. Pre-COVID, by 2019, that was at about 5%. Now we're sitting here as a group and Chad is sharing 2.8%, which means we measure profit in a denomination called the penny that the federal government no longer makes, right? That's how difficult it's become. And it's happened in that span. And Chris is right, that threshold for what people will pay, that's across the board. Where the exception seems to be is they'll stand in line at Quick Star or they'll stand in line at Casey's. And it does, we have to look at that changing face of competition as well and know that we may never see 30, 30, 30, 10 again. Those days are likely gone forever.
Jessica, on that 2019 number that you mentioned, even in that early 2000s to 2019, what was eating into it before COVID?
Primarily labor is what we really saw increases in. It was a growth in labor, but there are other non-obvious expenses like credit card fees. Credit card fees right now for many operators actually are higher than your monthly rent or mortgage. And so those are things that we have to take steps. Right now in Iowa, about 4 in 10 operators and almost everybody in Des Moines is doing that surcharge back on the credit card fee to try and reabsorb that. But there are hidden costs like insurance that just are not that obvious to a consumer as well. And so it's hard out. It's hard out here for operators. So it's hard to hear numbers like Winnie is sharing where people don't want to pay to be disappointed. I guarantee you there's not a restaurant owner that wakes up with a plan to disappoint. That's like a knife to the heart in our industry, because for many people, if you're not profitable and you're keeping your restaurant open, all you've done is create a lifestyle for yourself. And it's a lifestyle that you've bought into and probably love and are willing to continue and you may not have something to sell at the end of it.
Winnie, you visit a lot of restaurants and have great perspective from that standpoint. Some of the things Chris was talking about probably showed up in your survey, right? And I know it wasn't a formal scientific survey, but some of that sentiment showing up, the question about value and food portions, and that stuff seems to have found its way into that.
Oh, absolutely. I mean, and Jessica, I know that, restaurateurs, it is a knife to the heart, because they came into the hospitality business to feed people well, because they love food and they love doing that. At least most of the smaller restaurants and businesses I know that are doing that. But, nevertheless, what I'm hearing from diners is just more and more, they're leaving just kind of, as a couple of people say, just everything's fine, but just fine isn't good enough. And I'm kind of curious. Well, a couple things that stick out to me that I'd like to hear from you, Iowa Restaurant and National Restaurant. I'm so curious about this idea that that this fast casual restaurants are taking off so much, and I'd like to know if that's broken up in demographics in terms of younger people are skewing to fast casual, because I also think that, and this is not anything scientific, but I also seem to have the feeling that younger people, they don't want to be bougie. They don't want to. I think they have slight issues with sitting down in a restaurant and being waited on. Which I never have a problem with that, because I just assume that this is what they want to do in terms of what a restaurant wants to provide you with that experience. But I think a lot of I just don't know if this is true. I'd like to know the reason. Is it just cost that is driving these people to these fast casual places? They kind of know what they'll get and they won't be disappointed, which is great. But is it also just the sense that I don't think I'm I don't want to think I'm someone who's has to be waited on, for heaven's sakes. That's just ridiculous. I'm not that kind of person. I don't know. And so I'd like to know your perspective on that, if that's something that's even come on your radar screen.
I don't know if I would call it bougie, but we definitely know that Gen Z and millennials are willing to pay for the convenience of doing off-prem, right? We know that all of us do more off-premise than we did before the pandemic, right? And that's true even about I'm a Gen X, right? But we know that that's true. So when you look at the underlying data, people who are Gen X, or 2/3 of them, say that it's an essential part of their lifestyle to do takeout, right? And we know overall about half of all Americans consider takeout to be an essential part of their lifestyle, right? That's especially true for Gen Z and millennials. I think that your comment about fast casual, right, is certainly something that really gravitates for Gen Z and millennials as well, right? So I think there are definitely some generational aspects to that underlying conversation. The other thing that we've talked about, that we've done, and we've started doing a quarterly consumer survey. And not only are we seeing the pullbacks that you mentioned earlier, right? But there's a lot of Americans that are really struggling to make ends meet. But you also see the trade downs being a never increasing part of that conversation. Consumers looking for discounts, looking for those loyalty points in some ways. And so again, some of those things that you would expect. Now, all of that said, we are still seeing resilience. So I don't want to be a Debbie Downer here either, right? The stock market is not today, but in general has been a record high, right? And so you still see that bifurcation is a very real one, I think, in the U.S. economy. And you can go into restaurants in D.C. that are packed, right? And so you see that bifurcation, I think, in a lot of the traffic and sales numbers. That's really what's helped keep the economy afloat, right? And so you do see that kind of bifurcated consumer, and I think that where you're seeing that chase for value is really amongst a lot of those that are really struggling to make ends meet.
Jessica, any other thoughts?
I don't think you can. I don't think you can deny the fact that the reduction in alcohol consumption across all categories is affecting the restaurant industry in a very significant way. Dry January is the worst thing that ever could have happened to us, to be totally honest, because it's already a difficult time of year to have business. And when you look at alcohol consumption among Gen Z and millennials, I mean, they are just drinking significantly less. And that is changing some of the things that operators have to do mocktails are a real thing, and people have to be looking at that. And, you know, when I look at the numbers related to Gen Z, and I know, Chad, that you've got more of those than I do, but I'm looking at things like Gen Z, 47% of them prefer to stay home on the weekend, not a weeknight, on the weekend. Like go out, you know, and do something. They've forgotten how to gather. And so that's putting a demand on restaurants to create experiences that make them want to come and sit. And we are having to, you know, we always reinvent ourselves, and we're in that reinvention mode again in a lot of ways. When you look at, well, Chris, I mean, you should mention your pop-ups and things that you're doing. You know, we have to reinvent ourselves to draw people back out and remind them to gather.
Yeah, and say nothing of the GLP effect that is killing appetizer and dessert orders. But yeah, we're definitely seeing that alcohol consumption is down. And what we've done recently is we've added some of these functional drinks in cans, you know, whether it be mushrooms or something, not things that are going to give you some sort of a drug-induced high, but just functional drinks. And we're seeing a lot of success with them. And that's helping get the check average up a little bit. I recently had brunch with a young family. She was not drinking. Her kids were there. She ordered 3 of these cans in the course of our brunch, and they were $11 a piece. And I kept watching that going, okay, I was never going to get her for mimosas at this brunch. You know, if we didn't have these cans, she would have ordered an iced tea or a Diet Coke, and she would have had 10 of them for free refills. But instead, she spent $33 on these canned mushroom drinks. So, you know, we're trying to find any way we can to drive that incremental revenue. And as Jessica said, we're looking at pop-ups and doing fun activations with people, because I do think that younger generations are very much about the experience, and they want something that feels like they can't get it at home. If they're going to get out of their Lululemons, they want it to be for a really cool reason. And that just means more creative work for those of us on the ground, right?
But if they want to come in Lululemon, it's okay. Like, just,
Heck yeah.
just come.
Yeah.
That's the other thing I've noticed about friends that are younger than me. There is a perception that sit-down dining is a more formal experience, even in spaces that anyone in this Zoom would, or this podcast would think are not, you know, fancy places. And, you know, there's people who say, ooh, you know, I'm in shorts, I don't want to go there. It's like, whoa, what are we talking about here? You know, we're just going to go get a pizza. That is a real thing that I've noticed amongst my younger friends. And I don't know how we get over that. I don't know if that's a pandemic effect, but reminding people that you're the customer and we want your business and we appreciate you just as you are. Like, come spend your money. We'd love to help you. And we'd certainly rather do it inside our venue than give 20, 30% to DoorDash and have you eat it room temp out of plastic.
Will that be Casual Tuesdays at Bubba's coming next week? Is that the
Every day is casual day at Bubba. You come as you are.
Sounds good. You know, I want to shift to the future just a little bit, but want to make one last distinction here. You know, when we're talking about, these are businesses, and you're talking about you know, on average, I forget the number you said, but 1% or so on profit margin. You know, it kind of lends you down the question of, well, who's deciding to go into this business right now? And is that something that is, at some point, is that becoming a barrier? And is that okay? Is that, I'm sure there are people that are operating at a better margin than the average, but I'm curious, at some point, that's seems like a business I wouldn't want to be getting into, right? And so how do you think about that as we're going forward when there's all these pressures in the equation? I'm not sure that I'm asking that to anybody in particular, so we'll see who decides to jump in on that.
But Chris, I think one thing that's not going to change is there's going to be people that want to open restaurants. I mean, it's been consistent for 34 years. I've been in this business. That the question is, I mean, you hope that they have somebody like Chris's experience, business know-how. I mean, he's done consulting to open other restaurants. I mean, somebody behind them that understands the challenges, the hurdles that you're going to face in this business. And, you know, and then obviously from a landlord's perspective, are they well capitalized? Can they afford to do this? I mean, I think, you know, the last couple build outs I've done on restaurants in those strip centers we talked about, I mean, they're usually $300 to $400 a foot. And that's not to get to some fancy level that is Ruth Chris type level. I mean, that's just to get a restaurant with FF&E in it. And it's a huge undertaking, but I think one thing's going to remain constant is there's always going to be people that want to open restaurants and have the dream. I think can be an extremely rewarding business. Some of my favorite people in life own restaurants, and and it's their passion. It's inherent in them, and I think that's what's so great about the industry is you're bringing customers in and you're making them happy. You're giving them great quality food and great service, and I'm sure that's a rush for those that own restaurants. So I don't think that's going to change. The question is just finding the people that are qualified to do so. I also think Chris's comment is spot on that you got to kind of have your head examined if you're going to open a 7,000 foot restaurant right now. I mean, that's a huge undertaking. You got to be part of the elite to make that work.
And that goes to the bifurcation part that we were talking about in that gap is that, again, if you have to have a lot of experience in order to do it, that also is a preventative type of approach for folks to come in and have success right away when they're trying to figure it out, right?
I have a question about, the size restaurant. It used to be in the late 90s, early 2000s. We had a lot of nice little corner bistros, small restaurants. They were lovely. And then all of a sudden, everybody went big. And I just wondered, is that the only way you could make a profit at one point? Or what happened to, we had Sage and Bistro, 43, and just really sweet, and I go to, Omaha has a couple, corner bistro sort of places. I don't see them in Des Moines. Is there a barrier here that's preventing this, or does everybody just dream big?
Well, I just one perspective here, but I would say if you're going to go under 3,000 square feet, you'd better plan to be the owner operator. Like the husband better be in the kitchen and the wife better be running the front of house, or vice versa. You will not make enough margin to have layers of management under you. So, that's just it. I think that's part of why people are scared of it. I do think the consumer loves that small concept. And I think young people especially, love that, think about Winnie, Lucky Lotus in our neighborhood. It's people love that smaller experience, but that family is back there working that kitchen,
Absolutely.
and not everybody can do that. I'm a pretty decent home cook, but I'm not a chef. And so, you got to look at that. The other trade-off with the larger spaces is when you make all your money, which tends to be the weekend, the more seats you have between 5:30 and 8 p.m. on a Friday and Saturday night, the more you can drive revenue. But you also have to think about the shoulder times on a random Tuesday at lunch when you've got 120 empty seats there and you're going, ooh, this doesn't look great. And I'm paying for it 24/7. So the build out costs are crazy.
Chad, can you share some of you guys really segment the different types of restaurants and how they fare. Can you just share a little bit of that data, that overview? Because that's really good information.
So what Jessica's referring to, we do every other year, we do what's known as the operations abstract, where we go out and collect P&Ls from restaurants. And that's really where that 2.8 figure came from, right? So that was the 2024 number. For limited service restaurants, it's 4. Those numbers would have been 4 and 6 before the pandemic. So it shows you the squeeze. My view is that we actually have seen even further squeeze, not to depress people even further since that 2.8 figure. But if you go and you look at that, we actually have it in a various, full service, limited service, various size groupings. And you have, not that you're using as a benchmark, but you have line by line, what are the typical or median percentages for each of these categories. And so from that, you can say, we've done some posts on it. If your labor is over 40% of your overall sales, you're almost certainly not profitable, right? And you already mentioned, Chris, a number of examples really where operational costs can do it. So I think even though we don't call it a benchmark, I think people can look at those tables and say, hey, this is where do I fit here? This is my sizing. This is my type of restaurant. Where do I fit in that overall category, and see where you're out of line. And I think that's been helpful. So we did that in 2025. We'll do it again in 2027. So it'll look really at 2026 data. So that's something to look forward to. Thanks, Jessica.
Jessica, do you
Yeah.
do you track openings and closings of restaurants?
I don't, because it's just too hard to keep track of statewide.
Yeah.
But I will tell you this when you're asking about who is opening restaurants. Again, I'm a represent statewide organization, and one of the things that we have been fascinated by and pleased to see is that when you look at little main streets in rural Iowa, little downtowns, one of the things that can be very successful is a boutique food or bakery concept, and they're often opened by women. And so they are able to create a lifestyle where they have a small, maybe it's just lunch, or maybe it's breakfast and lunch, or maybe it's just a bakery, and it's providing a little bump in Main Street, which is something that I think should be celebrated and looked at. And the cost of entry is low there, and the hours work well for mothers or for people with families, and communities embrace and support those things. Again, Des Moines we have so many choices in Des Moines, we're overwhelmed by it. I mean, we are a Cheesecake Factory menu of restaurants right from what we get to choose. There's just so much there. And then of course, immigrants continue to open restaurants. It's one of the most familiar business models that immigrants understand. And so we do see that.
One of the things that I've had trouble wrapping my mind around is there's, when a restaurant like a Django or Americana in downtown is closing, that stands out, it's really visible. I'm actually having trouble understanding whether more restaurants are opening or closing and vice versa. And so I'm just curious if you, based on perspective, if you were thinking about Des Moines, would you say that there's more growth or more closures at this point?
If it's Des Moines proper, probably closures. If it's the greater Des Moines area, it's probably openings, right? Because where I'm sitting right now is close to Waukee, and I can't even drive down Hickman Road or Alice's Road without seeing something new. I'm a little dismayed, even though obviously the large chain restaurants are popular and they have a value proposition of consistency, and they can often negotiate better food prices. I am dismayed again by the loss of restaurants like Clyde's, like Panka Peruvian, like Django, like Americana, because those are the flavor and taste that are unique to our city. Those are those independent entrepreneur operators who had a vision that they brought to the market for us to see. And I continue to worry that that's where we're going to see the squeeze, is in that concept here, where the independent restaurateurs really struggle.
Bill, when you're from a real estate perspective, are you still seeing demand as you look into the future from a restaurant standpoint?
Yeah, I think we will. I think everything that's, regarding central Iowa and the suburban sprawl and growth, there's going to continue to be growth in those areas. Waukee is just incredible. I mean, there are so many restaurants that have opened there, and there are so many that will be opening here in the next 12 months. It's incredible. And what I'm finding when I talk to restaurateurs is the pie of sales is growing, but we're splitting the pie up into that many more smaller pieces. And so that's not that's probably not a methodology that's going to work long term. So I think you're going to continue to see closures. And I think the types of closures we've seen in downtown Des Moines are, those are some what I call signature restaurants. And it's very disheartening for somebody like me, because that's kind of your lifeblood of your city. It's the character of your city. And actually, if you would talk to a Waukee resident, or you talk to a Grimes restaurant, one of the things they're going to say is, oh, we don't have those quality restaurants out here. Meanwhile, they have like 1,000 options, but they don't have, the Djangos and that kind of thing. And, I try to be graceful, but part of me goes, you know what, you should have gone to visit Django downtown when it was there, because now, that place is gone, and what you're seeking in your city isn't going to be available probably. So, I don't think the the desire to open restaurants. I think it'll continue. I just think there's going to be fallout, and a lot of it comes down to, I know Chris had to leave, but when you look at a restaurant like his at Bubba and you see the kind of service that they provide and the kind of quality, I mean, that's a real differentiator and that real difference in terms of that restaurant experience. And those kinds of restaurants that really focus on value and providing that service experience, will have a better shot at success long term.
Well, I appreciate the insight here back and forth, because it can become really easy, and like anything in the economy, to make a broad stroke and say restaurants are struggling. Well, that's not necessarily it. There are pockets, and this conversation has really helped to see some of that. Chad, maybe from your perspective, as you look forward, there's, I know a lot of restaurants went through the pandemic, and they've had to, a lot had to take out loans, and so just from a national perspective, how has that looked, and how's the health looked, and where do you see that maybe going for restaurants?
Well, we still are, we expect to see more than 4% growth in sales this year. Now that's a nominal number. When you strip out menu prices, it's going to be less than 1%, right? And so it really speaks to just that resilience. But again, I think you mentioned this earlier. There are various components of that, right? Right now, we're seeing greater growth with quick service and fast casual, and maybe even your fine dining. It's that middle category that's really struggling, right? And I think for restaurants, as we move through the course of this year, it's important to really distinguish. Number one, get more butts and seats. Well, how can you do that, right? And so that some of that's loyalty, some of that's making sure you're doing some of that discounting and other things that we talked about earlier. Some of it's menu innovation, right? If price of beef is up a lot, right? What else can you really shift around on your menu to make sure that people maybe gravitate towards that? It's a little cheaper. And I think restaurants are looking for ways that they can become more efficient, right? How can you squeeze out some additional efficiencies in the system that you can maybe save a cent right here or there, that will allow you to really to kind of button that up. Obviously, as an economist, I have to mention the Strait of Hormuz, right? So I think the big elephant in the room, right, is that, obviously the price of gas was up a lot, over $1.50 a gallon, right? That's put a huge squeeze on a lot of Americans. Price of gas is coming down right now, and so if we can move beyond that, I think we came into this year with a lot of tailwinds. Hopefully, we can get back to some of those tailwinds, and we could have a better second half than the first half if that's the case. I mean, I think GDP is going to grow at least 2%. On the employment side, we've also seen some strength, and if people have jobs and solid wages, they tend to go out to eat, right? And so, but we got to get past the elephant in the room for some of those things to really be true, right? And so, I haven't even talked about diesel prices or fertilizer or any of those other things.
Every game from the Iowa Lottery gives you the chance to become a win-ionaire. Living rich, your way. From a looks like lunch is on him-ionaire, a world's coolest aunt-ionaire.
Don't tell your parents.
And it's finally all ours-ionaire. Or a permanent vacation-ionaire. No matter what, where, or how you play, you can be a win-ionaire with the Iowa Lottery today.
So we're getting near our time, and we could continue going on for a long time, and maybe we'll have to do a round two of this at some point. But I wonder, as we think about, maybe have each of you think about from a solution standpoint, what are some things that could, either from a restaurant perspective or from a consumer perspective or community perspective, that maybe could be done to help continue to encourage having a healthy environment for our restaurants to be operating. And anybody first?
Well, I'll kick something in. We just touched on it barely from Chris, but 8% of Americans are using GLP-1s. And Chad has put some numbers out that show that they still like to go out to eat. And so I think something restaurants can do is create some menu situations where someone who's eating 40% fewer calories can still come out, find value, and have something that accommodates that, because that's only going to grow with the introduction of new formats of that. So we've been telling restaurants, make it GLP-1 friendly somewhere in your menu, whatever you're doing.
That's a great idea. Winnie?
I think what I heard most from the diners is that they want restaurants to succeed. They want to go out to eat. They just can't afford to be disappointed. They're willing to, to spend the money. So I just think the restaurants that succeed are going to be the restaurants that don't let people walk out the door disappointed. They've got to up their game in a lot of ways, because I'm hearing about a lot of disappointment out there, and that's a problem.
Yes, there was when I first moved to Des Moines, and probably it would have been 2011 or so, there was some restaurants in downtown and they closed, and people were like, well, they've been here for a while, and it was like, well, sometimes restaurants have to close, right? There's sometimes you're at a spot where it's not providing the service level and they're going to end up closing. And so I think there is some of that too. And Jessica, your comment about perhaps the oversaturation of restaurants, that means there's more competition there, and competition generally leads to people competing and trying to put their best on. And I think it'll be interesting to see how that plays out over time.
I mean, competition also makes it harder to get really, really good help, and that's got to bear on these restaurants. The labor pool of really, really qualified, trained staff probably just isn't what it used to be. So that has to, I think that restaurateurs, I mean, they're squeezed in so many ways, but they have to still train their staff. And especially the front of the house staff, the people facing the customer, and people need to walk out of a restaurant feeling, I spent $100. That's a lot of money, but boy, that was worth it. For a somewhat casual meal, they just got to feel it's worth it. That's all.
All right, Bill.
I guess my message would be to the consumer. I would just ask, don't paint this broad stroke that it's too expensive to eat out. There are a lot of our restaurants that are in Iowa, especially, that are offering specials. There are certain nights kids eat free. Don't be afraid of the after hours, the 5 o'clock type. Get in early. Things are half price type thing. Just be mindful of that and spend a little time understanding that, because I do think. By and large, I think one of the best comments I heard today was these restaurant owners don't want to really don't. And, to give them a shot and just, you'd be surprised. There is some really good value still out there. I know everything's more expensive. I get it. But there is still some really good value, and take advantage of those. Maybe spend a little time researching those, because I think, not only are you hopefully going to have a wonderful food experience, you're really helping the Iowa economy. So that'd be my message.
All right, Chad, why don't you chime in here on something maybe from a solutions perspective that we could think about? And Chad, before you go, we're going to wrap it up here. At the end, I'm going to ask everybody to give maybe another food plug. It doesn't have to be so super secret, but I'll ask for one more closing one to send everybody away with it. We do something in Dish called To Go Box, so this will be everybody's To Go Box as we go.
Okay. Well, I like Winnie's idea of experiences, because we have the same research that shows that value is not just about price. But I'm gonna double down on Jessica's comment. And I use the GM analogy, the old GM, right, where they used to have a car for every depending on your income stream, all the way from Pontiac to Cadillac. And proof I'm aging myself by saying the word Pontiac. But and I think restaurants need to do the same, right? If whether you're thinking about value, or whether you're thinking about GLP-1s, or whether you're thinking about beverages and younger people drinking less, you got to make sure that you have options for everybody, right? And I think that if you think of the old GM model, right, that allows you to really lean into those people who want to have smaller portion sizes or something less expensive, but also you have options for people who are willing to pay more. And I think the same is true for beverages. You can go all the way from beer and wine to mocktails and energy drinks. And so that's often the advice I give, is the old General Motors BOP, which is what the example we used to use.
Sure. One more question for you. As you've listened to the conversation today and heard a little bit about Iowa specifically, do you hear anything in what we've been talking about that is either different from what's happening on a national level, or is it pretty in line with what you're seeing nationally too?
I think it's in line. I mean, I think going back to the comment about openings and closures, for a long time I said, well, at least I was taking hope in the fact that there was more openings than closures. Those data tend to be a little bit more lagged, but we are seeing a little bit more closures as well. And I think it just really speaks to how difficult the math is right now. And so yes, everything you're saying is very familiar to me as I travel around the country.
That's interesting. Okay, so we'll go final closing thought, and then one good takeaway for our to-go box of something food related to share with our audience. Then we'll wrap things up. So Jessica, why don't you go ahead and start us off?
There's still nothing like going to an old-timey steakhouse in a little tiny town. And so I'm going to send everybody towards Rusty Duck. Don't forget them. It's so great out in Dexter. And, the owner's always in there, and you can stick your head back in the kitchen. And, you want experiencing great food, and you want to be reminded where we're sitting. That's what I would do.
It's funny you mentioned that one. My wife and I and our kid during the pandemic, it was during the summer where there was a little bit light in the tunnel for the moment. We went out hiking out that direction, and we stopped there on the way back. And it's one of those good memories. I remember that memory crystal clear, right? So
yeah, that's definitely worth it.
All right, Winnie.
What some of the people in my thread were talking about how it's like so many restaurants have the same cookie cutter menus. You're seeing, Caesar this, you're seeing burgers, you're seeing, Brussels sprouts. You're just seeing the same thing again and again and again. And then somebody said, "What are you talking about? Have you been to the Indian restaurants? Have you been to the, various different kinds of Southeast Asian restaurants? Are you really going out there that much?" And I would say, if you are getting tired of, I get it. I get tired of the cookie cutter menus too. I mean, I don't really even want to eat another burger for a year, right? It's just not something I need to do. But gosh, there are so many great restaurants that are just, maybe unfamiliar to you, but you're not going to go broke eating at them, and you're going to learn something new. And one of my favorite is Mingalabar, which is a Burmese restaurant. And I know that people are like, "I don't know what Burmese food is. What do I do?" And it's like, well, it's, a little bit of Thai. It's a little bit of Laotian, it's a little bit of Vietnamese, it's a lot of Chinese and a lot of Indian. So if you like any of those cuisines, you'll be really happy there. So give them a try.
That's on my list now. So
yeah. I'm going to second that one too.
Yeah, right.
Winnie, why don't you just give a little plug for your Substack? You do great work. And
thank you. Yeah.
You contribute to Dish, and you're a part of the restaurant economy. And so just give a little bit of a plug for your work.
Oh, right. Well, I mean, I try to help diners find restaurants that they're really going to enjoy, that are worth the time and money, because it's more than ever, people really want to make sure they're getting their money's worth. So that's what I do at Dining Well in Des Moines with Winnie Moranville. And it's a newsletter. You sign up for it, and I'll send you something weekly about a good place to go, or maybe a few good places to go. So thank you for asking.
Absolutely. All right, Chad.
So earlier this year, we went to Chef Kwame Onwugachi, I think is his name, a top chef. He has a restaurant here in town called Dogon, and I took my wife there, and she said it's the best meal she's ever had in her life, right? So African Caribbean food, so a little different, but also award-winning around the country. So
fantastic. All right, Bill, wrap us up.
I'm going to give a plug for a restaurant in West Des Moines called Urban Cellar. For a value standpoint, it's amazing. That's where Mary Beth and I will be on date night. And it's great value. Never been disappointed there. Been there dozens and dozens and dozens of times. And they do a great job there, Urban Cellar in West Des Moines.
Great plug, and I'll throw my plug in for two things. I'll throw my plug in for two things. Although not a direct restaurant, Gateway Market has a restaurant as part of it, and bacon brisket burger. That's my go-to. So when I am going to cook at home, I'll pick up that bacon brisket burger. So I'm also supporting a good restaurant in town too. Throw a little spicy cheese on top of it. It's one of my favorite things. So, and then the other one I'll plug in is Either Or. We didn't talk about the trend. I talked about it on Winnie's a little bit too. I've got two kids. The ability to go there and let the kids go run amok in the play area, which is kind of like the old McDonald's, ball pit type of thing. But this is outside. They can go run around. To sit there, that's become and that's one of the few places you can do something like that. So maybe there's an opportunity for some more things like that as the millennial folks with kids like me that it's a little harder to go out to eat these days in quite the same way. That would be I think there's some opportunity in that place too. So I just want to say thank you again to each of you for joining us today and helping us. You're in a tough business, as we've talked about, but also one that's really important for ensuring that we're all living in a community we want to be enjoying and enjoying when we go out to eat. So thank you all for being here today and for helping us get a little bit of a look ahead at what's going on here in the restaurant economy. And of course, thanks to our sponsors, CLA and Iowa Lottery. We can't put on programming like this without the support of our sponsors. So I hope you take a little moment to learn about each of them as well. One of the goals of this show is to help understand the economy well enough so that people can ask why we try to the layers on some of these topics, and restaurants and food businesses are helping shape the culture and health of our communities. And this industry matters a lot to us at BPC too. We focus on helping business leaders and communities stay informed, and we think it's really important to highlight sectors that are important to the health of our communities. And our focus here, one of the ways we do that is through DSM Dish, which we mentioned is our e-newsletter that comes out each and every week. We just won a national award for that. From across the association of magazines that we participate in. It was the best e-newsletter in the country and beat out some other food newsletters as well in other larger cities too. It's a testament. We get to cover the things that are happening here, and I know people are proud of the food and dining scene. We are too, and that's one of the reasons why we support that. One other thing that we're doing is Restaurant Week. We've done that for a number of years. This year, that's August 7th through the 16th. That gives people a chance across the metro, a chance to experience more than 30 participating restaurants through special prefix menus. You can scan the QR code on the screen or visit dsmmagazine.com/dsmdish to learn a little bit more. So we hope that if you're interested in subscribing to the e-newsletter, we hope you do that as well. Follow along with Winnie, participate in some restaurants. And of course, if you enjoyed today's show, please like and subscribe and tell your colleagues. I firmly believe we're stronger as a community when people have better information to make better decisions. That's what makes your business better and our community stronger. So thank you for watching. And until next time, keep your eyes up and peering ahead of Iowa's economic curve.